Hello everyone, how are you all? Hope you all are doing well. So we were doing the marathon revision, and in this video we would be doing what? Time of supply and value of supply. Very quick revision, okay? Very important chapters from exam point of view. Now, in this chapter, time of supply, we would be doing two sections. Section 12, time of supply of goods. Section 13, time of supply of services. Section 13, time of supply of services. Now, here, what does section 12 talks about? Time of supply of goods, okay? First of all, what do you mean by time of supply, ma'am? When the liability to pay tax arises. When the liability to pay tax arises is determined by time of supply. Time of supply. So, in case of section 12, time of supply of goods. In case of section 12, time of supply of goods. What is the time of supply of goods? In case of forward charge or normal charge is determined by 12 subsection 2. So, life is very simple. In case of forward charge or normal charge, life is very simple. We all know. What is the time of supply? It is earliest of date of issue of invoice or last date of issue of invoice. That's it. Earlier of date of issue of invoice or last date of issue of invoice. That's it. This is as per 12.2 read with notification number 66/17. We have done in the class. Okay. Now, what is the time limit for raising invoice? It is given where? It is given in section number 31. We'll study it here only. Since time of supply is linked with invoices, we will study it here only. So, when we have to issue invoice, so if it involves movement of goods, if the supply involves movement of goods, my goods are moving. In that case, removal of goods, I have to make invoice before or at the time of maximum till the removal of the goods, I have to make invoice. But if in any other case, it is up to delivery of goods. In any other case, it is up to delivery of goods. Okay. So, what are the general time limits for raising invoice? If we'll see, in case supply involves movement of goods, then before or at the time of removal of goods, but in any other case, delivery of goods. Okay. So, what is this? In case of supply of goods, what is the time limit for raising invoice? This is what we have seen. Okay. So, it would be date of issue of invoice or last date on which invoice ought to be issued. However, in case of service, we'll see what is the time limit in case of service. So, in case of service, it would be, or first we'll see what is the time limit of issuing invoice in case of services. So, in case of services, you have to issue invoice before or after the provision of service, but maximum within 30 days. But in case of banking financial institute, it is 45 days. Others, it is 30 days. Okay. So, you have to, in case of services, you have to issue invoice before or after the provision of service, but maximum within 30 days. And 45 days in case of insurance, banking company, financial institute, including NBFC, from the date of supply of service. Okay. Now, in case of services, if the invoice is issued within the prescribed time limit, that is 30 days or 45 days as the case may be. Now, I am a chartered accountant, I have issued the invoice on time limit. So, what would be the time of supply in that case? So, in that case, the time of supply would be earlier of date of issue of invoice or date of receipt of payment. Earlier of date of issue of invoice or date of receipt of payment. But if the invoice is not issued within the prescribed time, 30 days time was given to me. I am a chartered accountant, okay, normal service provider. 30 days time was given to me. I have not issued on 30 days. Then, in that case, if you don't issue invoice on the prescribed time, in that case, what would be the time of supply? It will be date of provision of service, when the service was provided, or date of receipt of payment, whichever is earlier. Payment in all the cases would be entering in the books of accounts or credit in the bank account, whichever is earlier. It will come in all the cases. Okay. So, if the invoice is not issued within the time limit, then date of provision of service or date of receipt of payment, whichever is earlier. And if the above events are unascertainable, then date on which recipient shows the receipt of services in his books of accounts. So, if I am not able to find out the provision of service or the receipt of payment or issue of invoice, anything, if I am not able to find out, in any of the case, in whichever cases I am following, I am not able to find out the above events, then they have kept it very simple. When the recipient will show the receipt of service in books of accounts, that will be the time of supply. I hope it is clear. Now, if you receive service up to 1000 rupees in excess of the amount indicated in the invoice, for example, in invoice the amount indicated is 1600 rupees, but you receive 2000 rupees, round figure, payment has been received. So in that case, now have you received up to 1000 in excess of the amount indicated in the invoice? Yes. Then the time of supply to the extent of such excess amount, that means for this 400 rupees, the time of supply at the option of supplier will be date of issue of invoice. Date of issue of invoice, and in this case you can ignore the payment date. You can ignore that payment date. So if you have received an advance up to 400 rupees, for that 400 rupees at the option of supplier, it could be date of issue of invoice at the option of supplier. Okay, so there are different possibility in case of services. Invoice issued within the time limit, then date of issue of invoice, receipt of payment, whichever is earlier. Invoice not issued within the time, then date of provision of service, receipt of payment, whichever is earlier. When above events are not ascertainable, date on which recipient shows receipt of services in his books of accounts, and up to amount in excess of 1000 rupees. In excess of 1000 rupees, time of supplier to the extent of such excess amount at the option of supplier be the date of issue of invoice. Be the date of issue of invoice. I hope it is clear now. Next, in case of reverse charge, what would be the time of supply? What would be the time of supply? So, reverse charge is there on goods as well as on services. Okay, so definitely reverse charge on goods is not in your syllabus, but time of supply in case of reverse charge of goods, they ask many times. Okay, so in this case, when what would be the time of supply of goods in case of reverse charge? What would be the time of supply of goods in case of reverse charge? We will see, and also the time of services, time of supply of services in case of reverse charge. So it will be earlier of, date of receipt of goods, date of payment as entered in the books of accounts of the recipient, or date of payment which is debited to his bank account, whichever is earlier, and 31 day from the date of issue of invoice, and 31 day from the date of issue of invoice. Okay, so it will be earlier of receipt of goods, date of payment as entered in the books, or 31 day from the date of issue of invoice. Earlier of these three. What? Date of receipt of goods, date of payment as entered in, and 31 day from the date of issue of invoice, whichever is earlier of these three. Now, what would be the time of supply of services? In case of services, it would be earlier of date of payment as entered in the books of accounts, or the date of payment as debited to his bank account, or 61 day from the date of issue of invoice, or 61 day from the date of issue of invoice. So, earlier of these two, what? Date of payment, or 61 day from the date of issue of invoice, or 61 day from the date of issue of invoice will be what? Time of supply of services, But if these events are not ascertainable, then life is again simple. What? Date of entry in the books of accounts of the recipient of supply. Date of entry in the books of accounts of the recipient of supply. Okay, would be the time of supply. Now, in case of import of service, when you are importing the services from associated enterprises, if you are importing the services, then date of entry in the books of accounts of the recipient, or date of payment, whichever is earlier. So in case of import of services, what would be the time of supply? When you are importing the services from an associated enterprise. When you are importing the services from an associated enterprise, what would be the time of supply? The time of supply would be date of entry in the books of accounts, of the recipient, or date of payment, whichever is earlier, would be the time of supply. Next, time of supply of vouchers exchangeable for goods and services. So in case of vouchers, in case of goods as well as services, if the supply is identifiable at the time of issue of voucher, when I am issuing the voucher, that time the supply is identifiable, then date of issue. For example, in case of Metro Shoes is giving you a voucher that you can use it for the purchase of shoes. That means the supply is identifiable. So time of supply will be triggered at the date of issue only. In all other cases, date of redemption of voucher. For example, Pantaloons is given you the voucher. You can purchase shoes from it. You can purchase bags from it. You can purchase anything, watches from it. So in this case, what would be the time of supply? It would be date of redemption of voucher. And this applies both in the case of goods as well as services. I hope it is clear. And then Time of supply of goods and services in residuary cases. What are the residuary cases? We'll see. Where the periodical return is required to be filed, due date of filing such return. Where the periodical return is required to be filed, due date of filing such return. In all other cases, date of payment of tax. Date of payment of tax. So this is the residuary entry. It will apply in case of goods as well as services. Again, for goods, section 12 will be triggered. Section 13 will be triggered in case of services. So where residuary cases, where periodical return is required to be filed, then due date of filing return. In all other cases, due date of payment of the tax. Now, time of supply for addition in value. Now, there is an addition of value. Why? Way of interest, late fee or penalty. What? Interest, late fee or penalty for delayed payment of consideration. So, what would be the time of supply for addition in value by way of interest, late fee, penalty for delay payment of consideration? So, in this case, the time of supply will be date on which supplier receives such addition in value. Supplier receives such addition in value would be the time of supply. Would be the time of supply. So, what would be the time of supply? Date on which the supplier receives such addition in value. Receives such addition in value would be the time of supply. Because you don't know now, because why government has kept this provision? Because you don't know when the person would be paying the amount. Whenever, for example, I have told you to pay me the amount by 1 month, you came after 4 months, I don't know, you will come after 3 months, 4 months, 5 months, whenever you will come, I'll levy late fees on you, interest on you. So for that, government said at the time of receipt of that amount, time of supply will be triggered. Time of supply will be triggered. I hope it is clear. Okay, so this is the chapter about beta time of supply. We have very quickly revised in case of forward charge, reverse charge, then in case of vouchers, residuary cases, and interest, late fee, penalty for delayed payment of consideration. So this was time of supply chapter. 2 sections we have to see here. Section number 12, it is regarding time of supply of goods. Section number 13, it is regarding time of supply of services. I hope it is clear. Next chapter, value of supply. Very simple chapter and very important in exam. Definitely questions come from this chapter. So section 15 talks about what? Value of supply. Value of supply. In this chapter we have to remember only one section, section 15. 15.1 is value. What value is to be taken? Transaction value. 15.2 is inclusions and 15.3 is exclusions. That's it in this value chapter. Now, so when value of supply, when it is made to an unrelated person and the price is the sole consideration. Two things. When it is made to the unrelated person and the price is the sole consideration, then the value will be transaction value. But if the supply is made to related person, or the price is not the sole consideration, or supply is a notified supply under 15.4 and 15.5. 15.4 and 15.5, in that case value is to be determined as per the rules. So, यहाँ पे what we were discussing. So, if the supply is made to related person, or price is not the sole consideration, or supply is notified supply under 15.4, 15.5, in that case value would be determined as per valuation rules. Again, valuation rules we would be discussing very soon when we would be meeting in CA finals. Right now you have to remember only 3 sections in this chapter. 15.1, 2 and 3, and 15.4, 5 you have to just remember this. If the supply is notified supply under 15.4 and 5, then in that case we have to jump to valuation rules. Now, what is value? What is the value that is to be taken? Transaction value. What do you mean by transaction value? Price actually paid or payable. When the supplier and the recipient are not related, and price is the sole consideration, So value is what? Transaction value. Price actually paid or payable when supplier and recipient are not related, and price is the sole consideration. This is as per 15.1. 15.2, what does it talks about? Inclusions in the transaction value. What all to be included in transaction value? First, taxes. Other than GST, whatever taxes are given to you in the question, you have to add it. Like excise duty, municipal tax, professional tax, any taxes given in the question other than GST is to be added. So taxes other than GST. Then third party payment made by customer in relation to supply, which the supplier was liable to pay and were not included in the price. What is this? Third party payment by the customer in relation to supply, which supplier was liable to pay and were not included in the price. Okay, so for example, what happened? I have purchased, for example, a flat. The flat value is 1 crore rupees. 90 lakhs I have paid to the builder. Builder said 10 lakhs you paid to the third person. I have to pay him for the cement actually. So you do one thing, you make payment of 10 lakhs to him. Who was required to pay that liability? Supplier. But who has incurred it? I have incurred it. So it would be included in the, it would be included in, included as per 15(2). So this is what, this is a third party payment which is made by customer in relation to supply, which the supplier was liable to pay. Whose liability was to pay it? Suppliers. And it was not included in the price. So it is to be included. Then incidental expenses. Incidental expenses including commission, packaging, and or anything done by supplier in respect of supply till the delivery of the goods for supply of service if charged to the recipient. So what is this third? Incidental expenses. Any incidental expenses, including commission, packaging. So commission, packaging are just example. In exam, if they are giving any incidental expenses, you have to add it. You have to add it, including commission, packaging, anything done by supplier. What did they say? Anything done by supplier in respect of supply till delivery of goods. Till what time? Till delivery of the goods for supply if charged to the recipient. If the supplier is charging anything to the recipient, then it is to be included in the price. You have to add it. So the packing charges, commission, inspection, any charges given to you in the question which is being charged to the recipient is to be added to the price. Then interest, late fee, penalty for delay payment of consideration. What is this? Interest or late fee or penalty. Interest or late fee or penalty for delay payment of consideration. If the payment is delayed, and if the supplier is charged any interest, late fee, penalty, does it form part of value? Yes, it form part of value. Then subsidies linked to the price other than the subsidy given by central or state government. So in case of subsidy which is linked to the price, is to be included other than the given by central and state government. So central and state government subsidies are not to be included in value. So these are the 5 adjustments, these are the 5 inclusions in the transaction value. These are to be added in the transaction value. What are those? Taxes other than GST, then third party payments, incidental expenses, interest, late fee, penalty, then subsidies other than given by the central or state government. I hope it is clear. Now there was one clarification which has come on TCS. You remember TCS under the provisions of Income Tax Act, it will not be included in the value. If in the question it is given to you, any TCS is given, it is not to be added to the value. As it is an interim levy and it does not have the character of the tax. It is an interim levy and it does not have the character of the tax, so it is not to be included. So if TCS is given, it is not to be included. Excise duty, professional tax, municipal taxes, all these to be added. GST not to be included. Okay, other than GST it is written. TCS is also does not have the character of tax, that's why it is not to be added. Okay, now what are the exclusions from the value? What are the exclusions from the value? So first is discount. Discount given before or at the time of the supply and recorded in the invoice. Discounts which are given before or at the time of supply. And recorded in the invoice, which is being duly recorded in the invoice, that discount is to be excluded. Okay. So discount which is given before or at the time of supply and recorded in the invoice, it is to be excluded. For example, in the invoice, the value is say 1 lakh rupees. Discount 10% is given 10,000 rupees. So in this, is discount recorded in the invoice? Yes, discount is recorded in the invoice. It is given before or at the time of supply. So this discount is to be excluded from the value. On GST will be payable on 90,000. I hope it is clear. Okay. Now, so this is what before or at the time of supply discount. If it is recorded in invoice, it is to be excluded. No issues at all. It is to be excluded. Okay. Now, the second thing. Post-supply discount. Regarding post-supply discount incentive, if known in advance and linked with invoices, if it is known in advance and it is linked with the invoices and proportional ITC has been reversed by the recipient, then it is to be excluded. See, in case of post-supply discount, it should be known in advance. The term should be agreed before. Okay, it should be agreed. It should be an agreement. Then it should be linked with the invoices. It should be linked with relevant invoices. And third is proportionate ITC to be reversed. If these three conditions are fulfilled, then only post-supply discount is allowed as deduction, otherwise not. What are those three conditions? It should be agreed in terms before, it should be linked with relevant invoices, and proportionate ITC to be reversed. So if these three conditions are satisfied, so in that case, what will happen? In that case, life is very simple. The discount would be allowed as deduction, otherwise not. Okay. Now next, there are a few clarifications on discount. First is buy more, save more offer. So in case of buy more, save more, for example, in mall when we go, so buy for 10,000 get 10%, buy for 20,000 get 20%, buy for 30,000 get 30%. We got these kinds of discounts. So these are known before or at the time of supply, and these are duly recorded in the invoice. So this will be excluded from the value, not a problem. It will be excluded. So there's some, something wrong has come over here. You can, cut it. We just know this. What you have to write if buy more, save more offer comes in the exam? Very simple, two things. It is known before or at the time of supply, and it is duly recorded in invoice. So it will be excluded from the value. You can write it here. It will be excluded from the value. Next, there are secondary discount which are not known at the time of supply or are offered after the supply is over, and it will not be excluded while determining the value because these are not known at the time of supply and the conditions are not satisfied. So this secondary discounts are the kind of discount, which are not known at the time of supply. For example, we have seen the example in the class. You remember the purchaser has purchased Mary biscuit of 10 rupees from a person. However, later on he came to know that there are other dealers are giving it at 9 rupees. So he knows that there is a difference of 1 rupees. There is a difference of 1 rupees, which is the discount which other people are offering. So he went to the supplier. He said ki everyone is giving it at 9 rupees. Then supplier said, okay, fine, I'll also give it at 9 rupees. He has given the post supply discount. Does this terms were set before? No. So in this case, this discount will not be allowed as deduction. So secondary discount which are not known at the time of supply, so the deduction is not available for the same. And then last, periodic year-end discount, volume discount. So for example, I have told you that okay, you sell 1000 unit of my product and then I'll give you 10% on all the invoices. Starting from the year, I'll give you on all the invoices. So the terms are agreed before. It will be linked to the relevant invoices, and provided the other person reverses the ITC, this will be allowed as deduction. Okay. So I hope it is clear. This is what value of supply. So we have very quickly done 3 sections right now. What? Section 12 we have done in time of supply chapter, time of supply of goods. Section 13, time of supply of services. And now we have done section 15, which is regarding value. 51 is value is transaction value. 15.2 is inclusions in transaction value. And 15.3 is exclusions in transaction value. So here we complete these 2 chapters with a time of supply and value of supply, and we'll stop our discussion over here. Thank you for now.